Since we don't use the word consolidated. We call them government-wide for the entire government itself, okay? And we're going to take a look at this. Now this can be a little difficult diagram to figure out, but it's really not that complicated. Look at the government-wide and then the funds. There are two sets of financial statements, government-wide and fund. Then we see something called primary government, right? And we see, so the statement of net position, what types of activities does it cover? What does it show you, the statement of net position? Governmental activities and business type and this discretely presented component units, right? How about the statement of activities? What do they show? Same thing, right? What happened to the fiduciary activities? But you know what? Fiduciary activities are never shown in the government-wide statements. Why? Because they don't belong to the government. That's why they are excluded from it, okay? Now go on to the next diagram, next part of this, funds. These are based on the modified accrual basis, and we have all these funds. And they include governmental and then these things called proprietary funds, right? So what are the three different types of funds do we see? Governmental, proprietary, and fiduciary, right? Notice how it's set up? They are the fund financial statements, three types of statements. Governmental, right? Proprietary funds, and fiduciary. Top government-wide only has what? Governmental activities and something called business type activities. Okay? Business type activities is the same as that enterprise fund. See that enterprise fund? That's the other name for it. See it right under the proprietary fund, enterprise funds. So this is, again, if you don't get it now, don't be concerned. What I want you to just try and understand is what is included in each one of these sets of statements, okay? So let's go take a look at the statements themselves. This is for the city of Jacksonville in Florida. At the end of chapter 2, there are a complete set of financial statements. Don't get lost in the details. I want you to just concentrate on the major headers. What's the name of the statement? Statement of net asset. Unfortunately, or fortunately, the statement's name has been changed by subsequent GASB pronouncements. It's called now the statement of net position, but it's okay to call it statement of net assets, okay? But if you see statement of net position, that's what this is referring to. What's the other word for it, aka balance sheet, right? So it's your balance sheet. Notice how it's set up. You have governmental activities and you have business type activities. Notice that? And then you have it for component units, which just don't think about it now, but component units are independent agencies of the state. They function on their own. Rutgers University is a component unit of the state of New Jersey. State colleges are component units, okay? So that would be, the Meadowlands is a component unit of the state of New Jersey, okay? But everybody see how it's set up. You have the governmental activities and business type activities. And notice, I want you to pay attention now to the major headers. Assets, right? Capital assets, see how they're placed, right? Liabilities, right? Non-current liabilities, and then net assets. So what's the accounting equation? Assets minus liabilities equals not shareholders' equity, but what? Net assets, right? We don't call it shareholders' equity. There's no shareholders in government, right? So we call it what? net assets that belong to the government. And net assets are further broken down into amounts that are invested in capital assets that are restricted and unrestricted. So that's the format of the statement. Assets, liabilities, and net assets. And the net assets are divided into assets, net assets that are invested in capital assets, restricted and unrestricted. 3 different components. Now let's take a look at the next statement. So we looked at the so-called balance sheet. Here we call it what? Statement of net position or net asset. Let's take a look at next the statement of activities. Now I have to tell you this. There are CPAs I have met. There are people who are very, very smart people, and they don't understand the format of the statement. Because it's a very confusing statement to look at. It's got numbers here, columns all over, but there is a reason for the madness. And let me describe to you how you can look at it and you'd never be confused. First of all, what is the title of the statement? Statement of activities. Income statement. We don't call it income statement. What do we call that? Statement of activities. We don't call it profit and loss. Governments don't make profit. Okay? We call it what? Statement of activities. Now, on the left-hand side, I want you to take a look at what's the first major heading? Governmental activities, right? We saw that before, didn't we? And what's the next one? Business type activities. We looked at that before, right? Component units. We looked at that before. See how the columns have been flipped, right? Now the interesting thing is, when you look at income statements, what does it usually start with? Revenues minus expenses, right? In governments, it's the opposite. Expenses minus revenues. Let me explain. What's the first column? Expenses, right? Go up to the header. What does it say? Revenues, right? Program revenues. It's divided into separate categories, right? But do you see that expenses and program revenues? Expenses minus program revenues equals what? That net which is shown under governmental activities. Everybody see that? Expenses minus those 3 items, which are program revenues, gives you the net. So let me ask you a question, and I know it's hard to read this, but let's say that I think most of you can see brackets, right? Governmental activities. What does that tell you? Every single activity that the government undertook resulted in what? A loss, or expenses, expenditures being more, or expenses being more than the revenue, right? Let's take a look at Jacksonville's business type activities. Parking system. Boy, they lost money there too, because that's a negative number. See all the negatives? Look at how this shows up. See the parking, these are all their business activities. Parking system, inspection, solid waste, baseball stadium, performing arts. These are the expenses and these are the revenues, and this is the net. So this is how you read the first part of the statement. So if I didn't know anything about governmental accounting and I look at it, what did I tell you business type activities do? They're supposed to cover their costs, right? Is that the case here? Not a good situation. For governments, that then you say, wait a minute, if they are all incurring these losses, how do they finance this thing? If you keep on losing money, somebody's got to make it up. Well, now we go to the second part of the statement, which is this part of the statement, right here, starting this part. And this is classified as general revenues. And these are basically what happens is, if you looked at the statement above, you saw all the different functions of the government with expenses, because you could identify what the expenses are. But sometimes the revenues you get are not for a specific function, it's for everybody. That's what we call what? General revenues. When they are program revenues, they are specific to a program or a function. So for instance, here, the programs were general government, human services, public safety. These are expenses to that. And these were the revenues we were able to identify for them. But here, property taxes is for everybody. It's for the entire government. And that's one of the taxes are always general revenues. Okay? Utility service, these are all taxes. And look at what happens. Negative 990. All this adds up to what? 1,136,000 and still leaves you what with what? A positive of 145. So let's think about this again, not to beat this to death. You have the top part, which is very program specific, and the bottom, which is what? Basically deals with the revenues themselves. And the same thing, by the way, happens with the business type activities, which were up here. It's amazing how government accountants somehow make these numbers work so that it's positive at the end, right? Okay. See this, all this negative right here is offset by this to still produce this small number. And this number, the net assets at the end of the year, ties to that statement of net assets that I showed you before. Those are the two statements. You understand those two statements, you've got half of the story. Okay? And better still, if you can prepare those statements, you're way ahead. Okay? So what we are going to be doing is understanding how to record transactions which impact those pieces. Okay? That's the general format. Again, we're going to be looking at this more in depth. This is just a preliminary introduction to the statement itself. So what did we see? We didn't saw business activities were separated from governmental activities, right? And we had programs. Okay. So let's go back and, oops. So those were the statement of activities and statement of net position, right? Again, keep on saying this to you, but you see what that is. For the time being, there is something called internal service funds. And I'm not going to go into this because this is going to really confuse you at this point. And the book doesn't do a good job bringing it in this early. But let me just describe to you one quick thing, which is business type activities. So what were business type activities? Things that were generate revenue or providing a service, right? Who are the people? The customers are outside your organization, right? What if the customers were inside the organization? When could that be? Why? How could you have internal customers? Yeah. No, let's say if a government, if you had a water utility, right? Or better still, let's say you had a town which did a lot of printing. They did a lot of printing work, spent a lot of money printing for some reason. Instead of sending their print jobs to Staples or some, place they set up a little own shop inside the government and said, you know what, we'll send you all our print. Everybody from the government will send you the print jobs. Your customers are what? Internal. Those are your internal service activities. I'm just giving you a very simple example. And governments use that, where they could have an activity which is run out locally because it's more cost effective. And so basically you have two types of business activities, external and internal. Right? And as I said, I don't want to get into this yet because we just want to try and understand. And look at the last piece, which is fiduciary activities. They are never reported in government-wide financial statements. Why is it? It doesn't belong to the government. Could you imagine looking at the state of New Jersey And let's take a look at the state of New Jersey, because I want you to see something. There's nothing like actually seeing this. Statement of net assets on page 26. Okay. There is the audit opinion, introduction, and actually this is what you'll be looking at this week. MD&A. Okay, here we go. These are our statements. Okay. Statement of net assets for New Jersey. See fiduciary activities here? Only what? Governmental and business type, right? Assets, non-current assets. Okay, now, if you were taking this course 2 years ago, we wouldn't have this next thing that I'm going to talk about, which is these new standards that have come up. See the word deferred outflow? And does everybody know what deferred revenues are? What are they? You receive money in advance for a sale that doesn't happen till next year. What is it? What happens? That's you debit what? Cash and credit a deferred revenue account, right? Governments have the same thing, but they don't call it deferred revenue. They call it deferred inflow and deferred outflow. Again, we'll go into this. You know, the interesting thing about governmental accounting is that things are changing before our eyes. You don't see that happening in many accounting standards, but things are literally changing. They're, you know, how many times do you have a standard setting body introduce new financial elements into financial statements? That's a pretty big deal, you know, and they introduce these two new elements, deferred inflow and deferred outflow. So, but this is what I want you to see. Liabilities, right? Assets minus liabilities equals what? Net asset, right? Look at this. Anything strange? What are the three parts of net asset? What's the balance in unrestricted net assets? That's right. Would you believe that? State of New Jersey has a net worth of what? Negative what? $40 billion. Right? And that's principally due to non-current liabilities, pension obligations and OPEB obligations, and other. Ever see a number, $38 billion other? Okay? And I wanted to show you this because this is how you can relate to what you're going to see. As you examine these statements, you have to, and this is why it's so important. And you know, every time I've taught this class, at the end of the class, I've had a few students who have come up and said, you know what? I never wanted to work for the government, but after taking your class, I'm thinking about it. And you know, we talk about these things, and the reason being is that we need some smart people to work in the governmental area. We need people who can, you know, who can be unfazed by politics, who can make the right decision. And not that these people are not trying hard, but we need some new blood. And we need people to be held accountable. But look at that picture. How could we have money has to come from somewhere. If you have liabilities, they have to be satisfied, right? The only way to get rid of that is by what? Reducing assets or reducing liabilities to get rid of that, right? But anyway, that's the okay, so we were here, I think. Okay. So now we take a look at the fund financial statements. And This is also one of my favorite questions. How many financial statements do you have? Well, you say, geez, I don't even know what this is. 2 governmental fund statements, 3 proprietary. Well, in the next 5 minutes, we're going to know which one these are, okay? Governmental, proprietary, and fiduciary. 3 classes, right? And it's really not that difficult because let's go back to our statements again. This is, notice the title of the statement. What is the title of the statement? Balance sheet, governmental funds. Not balance sheet, governmental wide. Just what? Governmental fund only, right? And then what do we have? We have assets, we have liabilities, and then something called fund balance. Instead of net position, we have what? Fund balance. Assets minus liabilities equal fund balance. Not owner's equity, but fund balance, okay? And again, we'll go through this. Tell me one thing. Look at this statement. What's unusual about this statement? Look at all the assets. Yeah. Yes, fund balance. Just like under accrual basis, it was assets minus liability equals net position. In this case, it's assets minus liability equals fund balance. See any capital assets up there? See any long-term liabilities? And this is an interesting part because remember the measurement basis, the focus, flow of financial resources. Capital assets, is that flow of financial resources? No. Capital assets are, you can't use them to exchange, to use them as cash, right? Same thing with long-term liabilities. So basically in the governmental balance sheet, you never see long-term assets or long-term liabilities. And remember, and this is what makes people go crazy. They can't understand. They look at the statement of net position, looks just like a business. They look at the governmental fund balance sheet. Half the things disappeared. What happened? Yep.
The asset side says due from the other fund.
Yeah.
Any inter-transaction?
Yes, those are inter-transactions. Yes, due from other funds. That's what that is. And actually, I'm glad you asked that question because up on the top are these special funds. These are the general fund, the special bonded. These are all listed here. And all I can tell you for the time being is each one of these funds is known as a major fund. Major fund meaning a substantially material fund. But as accountants, we just don't want to say it's subjective. What is major is subjective. Well, there is a formula for it which I'll go through in a minute as to what defines a major as opposed to non-major. Okay? So that is the balance sheet of the governmental funds. Let's look at the income statement. Actually, all right. So we had statement of net position and we had balance sheet, right? And we had a Rutgers graduate who says, I'm going to get to the bottom of this. These two different numbers. My fund balance is different from my net assets. There's got to be a way to tie those numbers. Well, there's a reconciliation that's done to tie the number, the fund balance to the net position, the two different bottom lines. This is the net asset number in the statement of net assets, and this is from the balance sheet itself. And this reconciliation is done to bring those two numbers together. And that's the reason why people get confused. Different bottom lines. Net assets are different than fund balance. So somebody says, where's the difference? Well, the difference is all here. Capital assets are not shown, and so on and so forth. Okay. Let's take a look at now the income statement for the governmental funds, for the fund financial statements. What was the other statement called? Statement of activities, right? This has a long name, statement of revenues, expenditures, and changes in fund balance. And again, revenues minus expenditures equal whatever the difference is, and it goes on. It's no different than anything else you'll find, with a business, except it's prepared on a modified accrual basis. Major funds listed this way, revenue sources listed this way, but very different from the statement of activity. Those are the two major statements, fund statements for governmental funds. There's also a reconciliation between this and the statement of activity, because two different bottom lines, right? So you have to reconcile, and this goes into that. Again, this is more for chapter 9 when we get to that, but I wanted to show you basically the sets of statements. So you looked at the government-wide statements, now you're looking at the governmental funds, now you're coming to the proprietary fund statements. And you know what, when we study this chapter, which is chapter 7, you can go to sleep in the class and you won't miss anything. Why? Because it uses commercial accounting. It's no different than, there are some terms, there are some statements which looks, it's like a breeze. And again, assets, you have capital assets, you have net assets which are shown across major enterprise funds and internal service funds. Enterprise funds, customers are outside, internal are inside. Notice we don't mix them. We don't put these two together in the total. We keep internal separate from the enterprise funds. Just like the balance sheet, sorry, this is, okay, here we go, is the operating statement, the income statement. We don't call it income statement, we call it statement of revenue, expenses, and changes in fund net assets. Notice the use of the word expenses, not expenditures. Expenses. Why? Because it's on an accrual basis, right? Again, the same story. There is a format, not, nothing, no rocket science here. What are the three statements that you prepare for businesses? Balance sheet, what else? Income, and what's the third statement? Oh, let's see if there's a cash flow. Yeah, there is a cash flow too here. But to make the job of government accountants miserable, this cash flow statement is much harder to prepare because it uses a direct method to prepare the statement. But I won't ask you to do that, okay? But here, the statement of cash flows is also prepared. See how this is? Very much like a business, right? Three statements. And finally, we come to the fiduciary funds. Actually, cash flow continues. Here we go, statement of fiduciary funds. Well, it looks like Jacksonville only has two types of fiduciary funds. Pension trust, actually three, private purpose and agency. There's another one called investment trust, which we'll talk about later, okay? Look at the amount of money when you look at what would be the biggest fund that you find within fiduciary? Pension trust funds. And again, that's where most of the money is, okay? And this statement is called what? Statement of fiduciary net assets. Believe me, each of these two statements we'll spend a whole chapter on. So don't think that as I'm going through this quickly, I'm just giving you a cursory, just a quick view so you get the idea of how these things are organized, okay? For instance, we'll spend a whole chapter just on fiduciary funds, okay? Statement of fiduciary fund, which is like your balance sheet. And then there is a statement of changes in fiduciary net asset, which is like your income statement for fiduciary funds. Okay, so let's try to get all this thing together, all the different statements. You have the government-wide statements, which cover what? Governmental activities and business-type activities, right? And what are the two statements there? Statement of net position and statement of activities. They are prepared on a accrual basis, right? Their measurement focus is flow of economic resources. They utilize operational accountability. Now let's move to the fund financial statements. What are they? They are the governmental balance sheet, the governmental statement of revenues, expenditures, and changes in fund balance, right? Those two statements. And then we have the fund statements for proprietary fund, which are the three statements, right? Statement of net assets, statement of revenue, expenses, and changes in fund balance, in net assets, and then cash flow, and then the fiduciary two statements. So how many altogether? 2 government-wide, 2 governmental funds, that's 4, 3 proprietary, that's 7, and what did I miss? Fiduciary, which is what? Another 2, plus 2 reconciliations, remember. Do you see now why the... But you know what? You'll be experts by the end of this, by the time we finish. You're going to know this stuff, but you'll know this stuff relatively well. And that's what we're trying to do is I'm giving you one side of the picture, which is the financial statements. We will go into how to record transactions, and which really leads to the next thing, which is what drives people crazy. If you have to prepare 2 sets of what do you do before you prepare a set of financial statements? Where do you get those numbers from? Trial balance, right? Right? You take it out from what? The trial balance, right? Do you have to keep 2 sets of books? One on a modified accrual basis, one on an accrual basis? Well, what we're going to do